in, and then pull up the trade that I'm working with. And there we are. Thank you so much for joining me, and thank you for waiting for me to arrive. When you get into one informational video and they're talking about something extremely important, you don't want to leave until they're done. And they were running over. So here we are. This is the trade that we've been working on, that I've been working on. It's New Zealand dollar, United States dollar. So it's NZDUSD. And this is the actual, it's a buy, and entry price is at 0.69586. Now, what you're looking at here on this chart is what is called a naked chart, because there's no indicators. It's not marked up. It's also in the daytime chart, and I'll explain all that as we continue on. My stop loss is currently at 0.62586, which, going down to the 4-hour, will show you it's 7,000 pips or $70 negative, because that's what a stop loss is. A stop loss is the most I'm willing to lose on this trade. That's the, I won't lose anymore. If you take a look at my balance, I don't think I have much to worry about. So, with that being said, my take profit is at 0.76586, which is also 7,000 pips or $70 in profit. Now, when you hit a price and you're in a trade and it goes above your entry price, you can actually move your stop loss above your entry price. So you move this line right here above here, I would say about 500 to 600 pips, giving you $5 to $6, especially if it goes higher than that. It makes it a risk-free trade. Now, trading's always risky, but as soon as you pull up your stop loss above your entry price, no matter how far down it comes, you're not going to lose what you've already made. Risk-free means literally risk-free. So you're not going to lose the profit you made, and you can continue to go up. And the reason I stay in the day is because of what I can see on it. Many people ask me why I stay in the daytime chart. Well, let me show you something. You go back into the minute time chart. What can you see here? Granted, you can see my stop loss, my entry price, and my take profit, but where's this trade going? And the market is open. I don't see it going anywhere, do you? Not much information here. So it's not a clear picture of this pair. Going into the 5-minute time chart, there's some movement, correct? But do you know what it's going to happen? Do you see what's going to take place? And it only goes to January 14th, which was only a week ago. In my opinion, there's not a lot of information here to know where this trade's going to go. Going into the 15-minute time chart, and it goes back to December 28th of 2018, which wasn't that long ago. In fact, it was less than a month. Imagine that. Where would you put your stop loss? Where would you put your take profit? On a naked chart. No way to see, no information on any of this. And I see someone trying to talk to me in the chat. So one moment. Thank you, Chris. And I can read the chat. Even though I'm sharing my screen and we're recording, I can still see what's going on. So without the ability to be able to see too far back, and it's not a marked up chart, 15 minutes is definitely not enough time. Going into a 30-minute time chart, yes, we do have more information. That's correct. However, it only goes back to December 6th of last year. Just barely over a month. I wouldn't advise trading in here, especially if you don't have the experience, a marked up chart, know the indicators, as well as the knowledge behind the skill that you will learn when you go to iMarkets Live and get the education. That's where we learn how to trade, from beginner to intermediate to advanced, and I'll get into more of that in a moment. So if you are a person that's got experience, got the education, know what you're doing, and you're comfortable with trading in a 30-minute or less time chart, have fun. If you're not and you don't have the information at your beck and call, so to speak, it's high risk, extremely high risk, and you're not going to survive long. So, going into the hour time chart, there's more information, a lot more, and it goes back to October 24th of 2018. Not too bad, but still, I'm kind of questioning where you would put things, because there really isn't that much information for you to actually look at it on a naked chart and be able to decipher where things are going to go. If you're got someone that is saying, oh, well, you know, I'm going to read the future, be cautious. Be very cautious, because nobody really knows what the market's going to do if they don't have a long, extended period of time. They don't have a clear picture. Now, going into the 4-hour time chart, and I'll be honest, when I first started trading, this is where I would stay, because I thought I was getting enough information. But if you look at the time chart, it says February 20th of 2018, just under a year. So I wouldn't advise you doing here either, especially on a naked chart. Now, don't get me wrong. You got the education, you got the know-how, you know what indicators are. You've got 90 days of trading on a demo account, so you're not losing your money. Then by all means, have fun, enjoy. If you don't, I wouldn't advise this. It's still, trading is very risky if you don't have the knowledge and education in your background. That's why I go into the day time chart. Because in the day time chart, when you're trading, you trade right, but you always look left. And the reason behind that is because every pair repeats itself. It's got a pattern. It's got a trend that it's going through. Remember, a trend is always your friend. It will not lead you wrong. But you cannot second guess if you don't have enough time to look and see what's going on. That's why I'm in a day. And while I'm sitting on where my trade is currently at and seeing that it's at 0.67269, which is about right here, right there, you put your cursor there and you run it left. And while you're running it left, you take a look and you go left until you come back up to the same type of pattern previously, which would be right about, nope, a little further, right about here is what I would think. because it kind of looks identical, but I'm thinking it's further back. So it's at 76586. I'm sorry, 767270, which would put it, as soon as you find it, right there. You can see by looking at the trade and the trend that it's done that it might go down a little bit further, but not so much as it's previously had, but it's going to shoot up. It takes time. It could take a week. It could take 2 to 4 months. That's why I'm a daytime chart trader, a long-term trader. I'm not a scalper. I'm not in and out of the trade quickly. I take my time. That's why I keep my balance margin level over 2,500%. If you can take a look, it's actually at 9,469.67% because I'm over $2,000 in my balance. And I started this at $280 last June. So as you can see, it takes time. And you compound your money by using a 0.01 lot size, the minimal lot size, so you can stay in the trade longer to compound what's necessary. You can have as many as 7,000 pips or as few as 7 pips, depending on your lot size. So as we continue, I'm going to stop my screen share because this market's still going. And while we've been talking, we started with $23.05 negative, and it's been bouncing up and down from $22.80 to now currently $23.21. Don't panic. Just relax. It's going to turn for you. So I'm going to stop my screen share and see if there are any questions. I know of one specifically that I'm constantly asked in a form of, where do I get my signals? Well, the signals come from 5 different areas. First area is Stevenson Lindor and Warren Wright, who are educators through iMarkets Live. And they have over 60 videos to train people how to do it on iMarkets Live TV or iMarkets Live University. Yes, it's an education. Yes, you'll go and learn. Yes, you can rerun those videos. The third area is Christopher Terry, who happens to be the CEO of iMarkets Live and has over 25 years of trading experience. And those years are profitable. He's done very, very well. Then we have Tracy Walker, who is my sponsor under David E. Monetier for her, and she'll teach you summits and webinars that are recorded so you can re-watch them on how to find a pair, set your charts, find out where your entry price would be, how to get in, how to get out, and everything in between. She's another one. And finally, the last one is swipe trades. Thanks for joining me, Chris. I'll see you next time. The swipe trades is an app that goes on your smartphone. And with that app, you're given signals or ideas of trades to take a look at. And once you go through the education and all the information, you will be able to make your decision on what trade pairs you want to deal with. That's where those signals come from. Now I'm going to pause for a moment and see if there are any questions. Going once, going twice, and gone. Thank you once again for joining me. on today's date of January 21st, 2019, and it's Monday. And I'll see everyone tomorrow, Tuesday, January 22nd, 2018. Now, you have a fantastic remainder of your day or night, depending on where you are in the world or when you're seeing this. And I'll see everyone tomorrow. Bye for now.